So just to check, right, how many attended the SVI Connect night on the 10th of December, last Tuesday, is it? Okay. Yes, William, I already makan already. How about the rest of you guys? So we are still a bit early. So a few more minutes before 7:30. So just wait for some other people to come. So I think today should have less than 100 people lah. I think just now I saw the registration about 80, 90. Okay. Yeah. None attended. I know Ting Seng lah. Ting Seng attended the the uh the gathering session. Okay, how about the rest? I can't remember so many names. Okay. All right. So how many attended or how many did not attend? I think is it easier, right? If you did not attend, just type no in the comments. All right, okay. Okay, so quite a number of you did not. This session is specially catered for you guys. Okay, so please mute yourself for those who just came in. How to mass mute? I usually, as I mentioned, I usually do not actually use the Zoom meeting. Oh, Michael came for the event. Oh, I'm muted already. Okay, but I still can hear some noise. Okay, never mind. Okay, let me share my screen right now. Yep. So pardon me, I really usually very seldom use Zoom meeting for webinar. Let me try to share my screen right now. How are you guys feeling for yesterday? Okay, yesterday had a very huge sell-off, right? How do you guys feel? Okay, let me share I put my things here first. Okay, share screen, Zoom too. All right, so I believe you guys can see my screen, right? This is the SVI Year-End Connect night. Can see? If everything can see, heart attack, Kelly say heart attack, just type yes, okay? All right, can okay, so you guys are, very familiar with me lah. I think that you guys are the best people, okay, in MarketWise Asia and Seasonal Advantage, right? Yeah, so I think it's okay to respond to me, right? So this session, I'll keep it very casual lah, okay? So yeah, just wait for maybe one or 2 minutes before we kickstart, okay? All right, so heart attack. So to be already honest, 不用怕啦, don't be afraid. I think it's a good chance that the market might rebound, okay, after the yesterday sell-off lah. Okay, later I'll share with you why, my reason why. Okay, before I get too ahead of myself, but I think don't be so afraid. I think it's fine. Okay, slept already, wake up, got some shock. All right, so let's kickstart this session. So let me just full screen so you guys can see the full screen, right? So you guys can see the full screen right now. Okay, let's kickstart. So once again, thank you so much for attending this SVI members only webinar. So this is, as I mentioned, right, this is catered to those who actually did not come for the gathering session. So I will repeat the same slide, okay, as per the gathering session. But okay, after this, okay, there will be a Q&A, especially for those who just joined the members not too long ago. I think during the Black Friday, and also I will also go through with you the current market condition. Especially, I think this is very timely. Yesterday just had a very quick 1-day sell off over there. And just to take note, right, for those who just joined recently, right, okay, after the 30 days money back guarantee it is over. No, I hope none actually opt for refund. Okay. Hey, by the way, for those who just joined recently, okay, the Black Friday one, can you just type me in the comments? I know Tin Sing just joined. Okay. Yeah. So I will send you guys another email regarding how to redeem the voucher and such. And for the coaching session, okay. Actually, in fact, there are more than 5 lah. Okay. In fact, there are 18 of you lah. Okay. There are 18 of you. But I will try to cater to the 18 of you. Okay, I will send another email. Okay, to after 30 days, to schedule a date. Okay, to check out your email after 30 days. Okay, and yeah, so but of course the priority will be given to the first five first lah. Okay, I will let them choose the date. Then after that, okay, the rest I will try. Okay, for all of you guys, even though on the presentation slide I explicitly say only five. So I hope you guys will really appreciate this gesture because it'll take quite some time. Okay, all right, to schedule the 18 of you. Okay, so yeah, so let's kickstart this session. So this was the SVI year-end Connect Night gathering session over there. Okay, so let me just go through. So whatever I share today, it is just for education purpose. Okay, not a recommendation to tell you what to buy or what to sell. So please do your own due diligence. So this is pretty standard. Okay, a bit sensitive nowadays. Okay, I'm not recommending any stocks. Okay, I am a data provider. Okay, so yeah, so how's the 2024 so far? Of course, one and a half weeks ago, it is a bit different. Market has been going higher and such. So let's point back to that day in time. Okay, let's assume that you do not know what has happened yesterday. Okay, so what actually happened? Okay, so the S&P and the Nasdaq. Okay, it is up about 26% year to date. Of course, now has dropped lah. I think about 23% or so, but it is still pretty strong, both above 20%. So, okay, let's assume 20+%. Okay, let's assume just more than 20%. So both the US equities market, the S&P 500 and the Nasdaq, both are up about 20+% year to date with very strong equity performance. Wow, do you realize that the emerging market, okay, those are not the developed country, okay, for example, like Brazil and all this, okay, Argentina, all this, okay, emerging market, okay, and then the MSCI, EAFE, these are the so-called ex-US, but the so-called the developed country, okay, like Japan and some of these other countries that are inside. So the other country, you can see that at the start of the year, they typically, in tandem with the US market, both US market and the worldwide, they are generally going higher. But even though the US are still leading, okay, the performance, can you see that this, this blue and purple one are the one over there, okay? All right. So, but after that, the fourth quarter onwards, right? Okay, the fourth quarter onwards, can you see that the US continue to go higher, whereas the emerging market and the other worldwide country, developed country, right, the performance has started to dip. So all in all, okay, this year it is still okay. US, no matter how many people maybe on social media, especially those perma bear, saying that wow, this is the eventually the US market will crash lah. Okay, we're going to face the worst crash of the decade lah, and all this. Okay, some of these perma bear. Okay, some of them you can think of, like for example Robert Kiyosaki and such. And then there are a few. Okay, I don't remember their name. That there are quite a number of them. But the US is still the number one. Okay, performer. Okay, in recent few years now. So US don't try to short the market. Okay, over the long run. Okay, the US market tends to go higher. Okay, the reason is because S&P and Nasdaq, they are the best company, 500 company. Okay, inside, because every time they will rebalance, in a way that rebalance as in those they are not performing so well, not profitable, they are got kicked out of the index and then replace them with a new one and such. Same for the Nasdaq. Okay, those not performing so well, they rebalance. Okay, see what will be included in the new index, who else will be kicked out of the new index. So they are always the top 500 and the top 100 company in the US. That's why if for those who are doing long-term investing, if you don't want to choose stock, one of the best way to just invest, not trade, invest, is to just dollar cost averaging. Okay, just buy the index lah. Okay, all right. So let me continue forward and talking about the sectors, right? Okay, this year, okay, I think many of you should be quite surprised. Okay, not the usual tech stocks, not the usual tech sector. I think this is a bit outdated already, okay? But, okay, comms services, okay, the XLC comms sector, it is still leading, okay? So, okay, let me go into this web page over there. So you can go to actually, okay, I prefer to go to Finviz lah. Okay, I prefer to go to Finviz. Okay. So in fact, you can actually add in your portfolio and such. So you can do a screener. So I already have my preset. It is the sectors. You guys can see, right? Okay, so if you add in the performance, not add in, as in you just sort the performance, go to the performance tab over there. So this is the performance year to date. Okay, so what can you guys see on the screen? Okay, number one, it is still XLC, right? So what is number two right now? What is number two? Okay, and number three. Okay, can you just type in the comments? Number two, can see or not? Can see the screen? Thank you, Manin. Okay, Chertio, thank you. Okay, so it's XLY. This is discretionary. A bit changes. So the third one is financial. So you go back to the screen over there. You can see that, previously it was financial utilities, so it dropped already. So in fact the XLY, the discretionary, has a leapfrog both financial and utilities over there. So the latest one as of today, okay, or as of yesterday, all right. So the number one is XLC, XLY, XLF. Ignore the S&P 500. Okay, after that is XLK. So technology is the mid kind of performing sector lah. Okay, XLU has dropped quite a bit. Okay, whereas the worst performing one, it is materials, energy, and healthcare. Healthcare, it is a bit surprising now. Okay, so but don't discount this XLV thinking that it's going to be back into next year. Typically, okay, there tends to be have some so-called sector rotation, like in a bull market, whenever sometimes one of the worst market this year, next year they tend to rebound. A lot of time they do that. Okay, so don't say that XLV energy is the worst. Okay, then you don't look into that next year. Okay, a lot of time they do have the sector rotation, but not so in a hurry now. Okay, when the time comes, I will update you guys again what I see in the market. But just to take note, to let you guys know what has happened in the market. Okay, XLC, XLY, discretionary, financial, and XLK. Okay. This over there. So previously at the start of the year, there was some concern saying that, oh no, this market that's been going higher at the start of 2024, only the Magnificent Seven, like Microsoft lah, Tesla lah, Nvidia, those big cap company are pushing up the market, whereas the rest of the mid cap and small cap, they are not really participating. That is true at the start of the year. So this is the 2024 over here. You can see that only about 25% or about 20%, it is outperforming the index. Okay, which means that the index is actually doing much of the heavy work. But as you can see over there, as the year go by and we are into the end of the year already, 1 year has already passed. You can see that right now about 40%. Can you see that over here? This level, 40%. Okay, 40% of the S&P 500 are now outperforming the index. They are even performing better than the big company. Okay, which means that the smaller company, the mid cap company, they are catching up and they are also broadly participating. Okay, in the rally. Clear so far? If clear, okay, just type letter Y in the comments so that I can move on over that. Okay. And as of now, okay, what I think of the US economy, what the so-called the Fed has been giving us, the economy data has been the data from the economy is giving us, right? It is the US economy, it is still pretty resilient. Okay, so I think I mentioned that a lot of times during the usual Facebook Live, but here are some of additional information that might be useful to you. Okay, just to let you know what has happened. Okay, the US GDP continue to grow. Okay, So not exactly, like a lot like those developing country, but I think 3%, okay, every single year, every quarter, 3% is not not 3% annual growth is not too bad. Okay, so this is a revise. So it is still about 3.3%. So all in all, the US economy, it is still growing. Okay, this is a good sign. Okay, and the consumer remains in good shape. So meaning that, people are still spending. Okay, and you can see that the average wage growth have outpaced inflation, okay, in the last year. So previously, okay, not say previously, okay, just about 2 years ago, okay, at the start of 2022, where inflation was a very big concern. Okay, inflation hit about 9%. That was the peak of the CPI data over there. Okay, but ever since, okay, the inflation data has come down, but still hovering at about 2+%, 3%. But at that time, okay, the inflation, okay, is outpacing the wage growth. But right now, as the inflation has gone down, okay, the wage growth, there's still a little bit of increase, but a bit stagnant. But other than that, this is comparing relatively also outpacing the inflation. So which means that people feel that they are a bit so-called better lah, their position, okay, better, a bit richer compared to 2 years ago. Right? Even though price still remain high, but at least it is not outpacing, at least inflation is not outpacing their wage. So all in all, consumer spending, it is still okay. Okay. And also, labor market has been pretty resilient. The US unemployment rate, okay, still so-called hovering at about 4.2%. Okay, of course, if you compare to the absolute low, there's a little bit of grinding up. Okay, but long-term wise, the average, okay, we are still below about the 5.8% average and unemployment rate. Okay, all right, okay, long run average. So right now we are about 4.2%. Okay, but okay, I think previously I also mentioned in my Facebook Live that typically when the unemployment rate, okay, goes up, okay, shortly after there is some delay, can be a few months, okay, or 6 months or 1 year, but typically, okay, there will be a recession. So whenever the unemployment rate creep up, okay, there's a recession, creep up, there's the recession. But so far, okay, at of now, still hovering at 4.2, okay, I think it is okay. As long I think we keep it below about 5%, okay, I think we are still okay. Okay, clear? So all in all, people are still employed, meaning people are employed. Okay, they have money to spend. Okay, they have money to spend, they'll buy more goods and products. When they buy more goods and products from companies, okay, companies make money. Company makes money, okay, then they have wage, okay, to give the employees. Employee have money, okay, then they have again more money to buy products again. So this is like a positive feedback loop. Okay, so obviously, okay, the reverse is true as well. Okay, if unemployed people have no money to buy things, no money to spend, okay, then people buy lesser thing. People like buy lesser thing, company make less profit. Company make less profit, okay, then they have to retrench more people, more staff. And when company retrench more staff, okay, all the staff have no money to spend, and once again, okay, they will once again reduce, okay, their spending power and buy lesser thing. And once again, they buy lesser thing, okay, continue again, okay, then more unemployment again, that kind of thing, okay. So this is a negative feedback loop. So as long as people are still spending, there's low unemployment rate, I think everything is okay so far. And this is also one of the mandate of the Federal Reserve, okay, to keep employment, okay, rate stable as well. Okay, and also maintain the interest rate in a favorable condition. Okay, all right, so this is the unemployment rate over there. So 2025, okay, what's next? So what do you think will happen in 2025? For those who already came for the session, okay, 2 weeks ago, okay, keep quiet. So what about the rest? Okay, what do you think? What's next? What's next for 2025? Okay, are you guys bearish or bullish in 2025? If you are bullish, okay, just type bull. Okay, if you are bearish, just type bear. So what's next? Or what do you think will happen? Boo, 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 boo. Oh, so many boo. Should I be worried? Now so many boo. Trump is back, no idea. Okay, Fabian say no idea. Okay, boo, but not so like this last year. Okay, okay, fantastic. Okay, all right, fantastic. Okay, everyone in the meeting. Wait, okay, can. All right. So, okay. So what's next? Okay, so I'm going to show you the next slide. So take some time, okay, and read through the next slide. This is going to be very important. So this is the sector-specific trends for 2025. Okay, I give you 30 seconds and read the slides right now. Okay, anything interesting, take note. Okay, I give you about 20 30 seconds. Okay, read the slide. Can? Or I take a sip of water again. By the way, this is taken from a multitude of 2025 market outlook report. Okay, you can see over there. Okay, oops. This is the renewable energy dominate new capacity. Again, very standard geopolitical risk. There could be volatile oil prices perceived. Okay, the demand for oil and coal. How about record vehicle? Okay, there's EV. There's still growing as well. I think this is everybody knows. Okay, consumer good. Okay, retail sales to expand modestly. Okay, this is a very kind of safe answer. Okay, with growth led by Asia. Financial service, this you already know already. Okay, there will be a high chance that the Fed will continue to cut rate. Okay, later I'll go through. Okay, of course, yesterday there's the Fed. They announced they will cut rate a bit the slower pace. Okay, so we know there's rate cut to ease borrowing costs, bond markets to rally. Okay, obviously, because if the rate interest rate reduce, okay, then bond price is inverse of interest rate, they'll rally kind of thing. Technology, okay, AI, of course, everybody knows about AI investment, okay, remain robust despite regulatory and operational hurdle. Healthcare, okay, spending growth above inflation, okay, will focus on climate resilient policies, okay. Will this help you or not, okay? So I read through quite a number of market outlook report, okay. You can just Google. It is starting to come out quite a number of them. I think there will be more to come as we approach to the end of 2025, okay. So ask yourself honestly, this kind of report, okay, does it help you or not? Touch your heart and does it help you or not? Okay, you can answer me, okay. My answer is I think, okay, I think for me it is at least it is not helpful, okay. It tells you a lot of things. There's a lot of reports now, like what 10, some there are short pages like 5 pages, there are some like 20 plus pages to 50 pages. They give you a lot of information, okay. All these, some of these are quite common sense, like in a way that, hey, you don't tell me, I also know EV is going to go higher, AI is going to go higher, that kind of thing now, okay. But it is not helpful, okay. Why? Because it is not actionable. To me, it's pretty useless, okay. So it makes you feel smart, but it doesn't help you to be profitable in the market. Yes, okay, like Manning said, it's too generous, too generous. So this is what, in fact, by the way, do you know how I summarize these reports or not? Okay, very simple. Okay, I just take a few of these reports, okay, and I just plug it into Chat GPT. Okay, so maybe a 10 pages report, 20 pages report they summarize for me. So this is a very summarized version, okay, in one of the report. So not useful, right? Correct or not? Okay. So, okay, what I think is more useful, okay, to you is to give you a rough roadmap, okay, of what could happen in 2025, okay. Again, this is not exactly 100% sure will happen, but at least I think it's very actionable, give you a guide, okay. So based on this Carson research, okay, I think I mentioned before in my live stream before, but in case some of you might have forgotten, in fact, I think most of you should have forgotten, okay. All right, so this is from Carson research, from posted by Ryan Detrick, okay, from X or so-called Twitter. Okay, so be careful of third year bull. So third year returns in the bull market, okay, can be weak, okay. Generally, you can see that, okay, the S&P average return in the bull market from 1950 until now, 2024, okay, about 70 plus years, 70 plus years, okay, it's not a very short history, it's quite a long history, okay. So of course, first year after the bear market, typically first year is the best rally, best bull run, okay. Second year, not too bad. Okay, so third year, the average is about 2.1% only, okay. So this year, we are in fact averaging about 20 plus percent, okay. Year one is also about 20 plus percent, okay. All right, so third year, it is 3%, not 3%, 2.1%, okay. But, and typically, okay, a bull market, okay, can typically last 5 years and above. Okay, so we are right now into how many year of the bull market? Can somebody tell me? Right now, we are into how many year of the bull market? Okay, I think I already tell you the answer, right? Because next year is third year, right? So right now, we are into the second year of the bull market. Second year because, okay, because if you take a look at the chart right now, this is the S&P index. Let me go to this chart S&P, okay? This is the weekly time frame. Okay, let's go to the weekly. I think I never changed the drawing. Can you see over there? Okay, this is the weekly. Every single bar is 1 week. Can you see that this vertical line over there? Okay, this was the exact low of the bear market. The bear market, okay, started in the start of 2022. Okay, of course, this one is the pandemic. Okay, then after that, the market had a very strong rally. Okay, bull market for 2 years. Then a bear market, okay, for less than 1 year. So the bear market, okay, the lowest, okay, was in October, okay. So October 2022 was the low, okay. Then October 2023, first year. October 2024 is the second year. So right now, we are into the second year plus of the bull market already. Clear so far? Clear, right? Okay, so you can see over there, okay, so third year typically is the worst of so far, at least from the 6 years of the data that it provide, okay. 6 years and above, the bull market can go 6 and above, but typically if we can pass the third year, okay, fourth year, likely fifth year, likely sixth year, likely it will be much better. So, at least it tells me that, hey, maybe next year, okay, might not be a so good year, okay. All right, so we need to be a little bit more careful because we have very 2 good year of very bullish market really. Okay, I think at the event itself, okay, there were some, I think there were a few, not few, there's one member, okay, she asked me, this market, has been very bullish, okay, is it like every year going to be the same, that kind of thing? Not every year is the same, okay. Okay, so in fact, these 2 years, it is a very, in a way, relatively easy market. What do I mean by easy? Which means that, okay, the market, it is very forgiving, okay. Let's say, for example, okay, you buy into certain stocks, okay, you don't put your stop loss, okay. There's a very high chance that you just hold it there, okay, the market will continue to go higher eventually, which it did, right? Okay, you just put S&P, whatever stocks, you hold it long enough, the market will continue to go higher and you'll be profitable. It's just how long you can hold, okay? But, okay, when it comes to a bear market, it is not the same. So a lot of people are burnt in 2022 because they are very used to the 2020, 2021 bull market, okay? When the bear market come, okay, they are not prepared, okay? They are a bit too slow to react, okay? And not only that, okay, at that point in time, okay, there are a few courses, okay, training provider, okay, or even some of the so-called financial guru, they say, oh no, value stocks is dead, okay, all should go for the growth stocks, okay, ARKK lah, C Limited lah, okay, Palantir lah, and all this. Remember all these tech stock and growth stocks, Zoom lah, all this lah, okay, during the pandemic, all went up very nicely, okay. But when the time comes to sell, they did not sell, okay, and eventually they lost a lot of money. Whether they eventually recover, I don't know. But so again, I'm not saying that third year is going to be a bear market, but be a little bit more careful. So at least give you some idea that, hey, 2 years already, okay, third year, based on historical data, it tends to be a little bit weaker. Okay, so what else can we use to justify that, hey, this might be, that there might be some truth in this data? Okay, so the next one, I think it's also pretty insightful over here. So this is the S&P 500 returns, also since 1950, also 70 plus years of performance over there. you can see that this red dotted line over there. So 20%, 20%. So this is average about 20%, okay, or arbitrary number, okay. 20% is a good number to tell you whether it is a good year or not, okay. And you realize that, okay, out of these 70 plus years, okay, there are quite a number of years that the S&P are up, okay. Not number of period, okay, number of period where the S&P is up, okay, 20% for 2 years consecutively, okay. This one like the dark blue, okay, first year 20%, second year also more than 20%. Can see over there like 1950 and 1951, okay, 30%. Then next year is like 20 plus percent. Then mid 1950, okay, what is crazy, 50 plus percent. Then next year is about 30 plus percent, okay. All right. I'm not born yet. I think most of you here should not have also not born yet. I believe so, okay. Most, okay. And then 1976, okay. Some of you might have born already. Okay, I'm still not born yet. I'm born in 1983, so I'm 41 this year. Okay. All right. So you can see 1976 also 2 consecutive years of 20+% return. Okay. And then 1980s, okay, I was born already. Okay. Also 2 consecutive years of 20 plus return. Okay. And then this is the .com bubble, okay. 1, 2, 3, 4, 5, 5 years of consecutive 20 plus return every single year, okay. And then of course, this year has not ended yet. Has not ended yet, but let's assume that the market, okay, can still be above 20 plus percent, okay. All right. Angela, you're asking some question. Okay, you hold on to your question first. Let me try to go through this thing first, then I will handle the Q&A later. Is that okay for you, Angela? Okay. All right. So you keep your question to yourself first. Okay. Later ask again in case I forgot. Okay. All right. So okay. So there are 5 instances. 1, 2, 3, 4, 5, 6. 6 instances of the past 70 years, okay, where the S&P have 2 consecutive years of more than 20 plus return. Okay, now let me ask you a very important question. How many period, okay, is there when the S&P it is up 20 plus percent for 3 consecutive years? How many instances? You take a look at the chart, okay? How many instances where the S&P is up 20+% return for 3 consecutive years? Okay, thank you so much for the answer, Henry. 2 Henry here, okay? Henry Ford and Henry. I think Henry Ford, maybe do you send to everyone? I think it's sent to everyone. Okay, yeah. Okay. Yeah, Henry Ford, I think if you want to send to everyone so that people know that you are another Henry here. There's 2 Henry. Okay, yeah, so 2 Henry say 1. Okay, thanks so much. Okay, so yeah, there's only 1 instances, just now I mentioned already, which is the .com bubble over there. So of course, this is 5 consecutive years. This is extraordinary. This is not a typical kind of bullishness. Okay, this is very rare event. Okay, so other than that, there's none. Of the past 70 years, there's none. Okay, but does that mean that next year it cannot happen? Yes, next year there is a possibility. Okay, maybe the year is like the .com bubble. Okay, another more than 20 plus return in a year. Possible. But what is the probability? Okay, so we always go for the probability. What are the chances that at the market will have a return of more than 20%? Possible, okay, but I think very, very low chance, correct? Very low chance, okay? So you can see that for the past previous years where the market is above 20% for 2 years, subsequently, okay, they are all below 20%, okay, obviously, okay, and some are like 18%, some are even like, just 5%, okay, and some are even negative here, like for example, this is, I think, drop about, return is minus 8%, so it's a negative return, okay, some are about 5%, okay, and then after that, of course, this is a .com crash, okay, and then, so after that, yeah, so what could be the return? So, let's assume, okay, it is between, 5% to about 12%, okay? So let's take about just 10% as an average, okay? So which means that, okay, next year, maybe the market can continue to go higher, okay? But do expect that the market might not give such a good return for next year. So keep your return, expectation low, 5 to 10%. I think that is good enough for me. So which means that, okay, the market will be a lot choppy. I repeat, the market will be a lot choppy, not like this year, not like this year where the market just chong, okay. Okay, first, this is the daily time frame. Okay, just this year, market just chong this year. Of course, there's some correction, but overall the market is trending pretty nicely. So next year, okay, the market can still go higher, but do maybe expect some choppiness overall, or maybe still go higher, about 5 to 10%. Okay, clear so far? If you are clear, okay, maybe just respond to me, just type 10. Okay, just type 10 so that I know that you understand what I'm trying to say. So I think this is a bit more practical, okay. I don't know about you. Do you think this is practical? I think this is more practical and more actionable. Okay, so let me go through the. So do expect the market to be less than that. So you have a roadmap guideline, maybe market to be positive, but lesser return. Okay, and what can we justify that next year there could be still be a bull market and not a bear market? Okay, or maybe some of you don't know. So I think what's the reason we could justify why next year could be still a bull market? Okay, so of course, a lot of the reason, not a lot of the key reason, okay, why the market it is still bullish in a bull market. Okay, it is still based on fundamental reason. Okay, fundamental reason. So fundamental so-called eventually will move the market. Okay, but what is the reason? So at the end of the day, it is still all boils down to the companies. Okay, the S&P, the Nasdaq, are the companies still making money? Do they still have revenue growth, earning growth? Okay, and the good news is, right, okay, based on our forecast, okay, the earning growth is expected to be higher in 2025. Okay, so I have two data over there. So this is taken from one source of data. So this year, okay, at the start of the first quarter, typically 4-7%. Okay, third quarter a little bit higher, 8-9%. But moving into 2025, okay, they are expecting a double-digit growth. Okay, more than 12%, above 12 to 15%. Okay, so let's assume it's about 12%. Okay, so it's a double-digit growth. Okay, when companies are making money fundamentally wise, making revenue, more profits, okay, then more investors are actually willing to invest in the market and such. Okay, all right, and then of course this is another data provider. So you see that this is the third quarter. Okay, third quarter over there. So it's in line with the data over here. Okay, and then the first quarter also very little, also in line with the data over here. Okay, so next year, all right, first quarter also 14.8, about 15%. Also, this pretty much in line with the other forecasts as well. So it is earning. If earnings continue to go higher, okay, by right, okay, the market should continue to go higher. Okay, that is provided, okay, there is no black swan event. Okay, let's assume that everything status quo and everything, okay, including all the current war, okay, what Middle East tension and all this, that is perfectly okay. So I mentioned during the SVI Connect night, right, okay, it don't come and tell me all these wars will cause a market crash and all this. There could be a knee-jerk reaction, okay, but Middle East tension and all this is not going to surprise the market. The market it is already expected, anticipating that this thing could happen. So a war will not cause a crash. Okay, there could be some knee-jerk reaction. Oil prices can spike up short term, that kind of thing, or the market might drop temporarily, that kind of thing. But eventually you will still go higher. It is still Middle East tension or war. Okay, if the market really need to crash, right, okay, it need to be another event that is unexpected. Okay, what we call the unknown, which means that nobody can predict, okay, the market. Okay, all right. So like I mentioned, right, another pandemic maybe, but you know, even if another pandemic, okay, the crash I think will not be so severe really, because you know people are already prepared, experienced before. So if you want the market to crash as bad as the pandemic, right, you need another kind of event to crash the market. You don't ask me why is it. If I know, you know, I'll be a god already lah. So we can't know, we won't know, we can't know. Okay, all right. So this will be the black swan event. Okay. All right. So other than that status quo, the market should be quite okay. Okay. Henry said I'm sane. Need to ask stock god. Okay. All right. So this is the thing over there. So I also mentioned in the gathering. Okay. One of the factors, okay, that can cause the investors or traders to outperform the market, it is also actually this factor called profitability. Okay, this is called one of the factor investing. Okay, so very simply say, okay, if you don't know what is factor, okay, I just give you this sentence, or this poser question, you understand what I mean. So what is the factors, what are the factors, okay, that cause high blood pressure? Now you immediately you know the answer, right? Okay, the factors that cause high blood pressure, okay, could be your diet, okay, could be your weight, you are obese, or it could due to genetic, okay, all right, and what else? Okay, the key thing is, or maybe you are a smoker, okay, all right, okay, inactivity. So these are the few factors that cause high blood pressure. So what are the factors that cause you to have alpha, okay, returns in the market, okay? So one of the factors is profitability. Okay, you need to invest in stock that has high profitability. So this is one of the factors, okay? And the other factors is like value. This is like what Warren Buffett, okay, started when he is still relatively younger. He invests in value stocks. So value stocks could be those price to book, low price to book ratio, that kind of thing. So you invest in value stock, you will have excess return. It will cause you to have alpha. So another factor is momentum. If you invest in the good momentum stock, okay, will cause you to outperform the market as well. And if you invest in those low beta stock, low beta is also one of the factors. Low beta means that it is lower volatility stocks compared to other stocks. So if you invest in those lower volatility stocks, it also tend to cause you to outperform the market. So these are the factors, and profitability is also one of the factors. So if the companies are very profitable, okay, it will also lead the indices go higher. Okay, Kenna, I hope you guys learned something new. Of course, for those who attended the SVI Corner Night, you should already know already. Okay, so I will share with you this seasonal trend. I think again, this is my roadmap, okay, my forecast of the year. Once again, this is not guaranteed to be 100% correct, okay, but at least it gives you some guideline what could happen. Again, not what will happen, just what could happen, probability, roadmap in next year. So this is the S&P 500, okay. This is post-election seasonal trend. Okay, this is since 1950, so also about 70 plus years. The key thing is this is only based on the post-election, which means that next year, the first year after the election. So this is based on 18 cycles, 18 cycles, okay? So you can see that typically we will want to take note of the turning point. Take note of the turning point over there. Okay, like for example, you can see that, you know, typically okay, I think this is blocking the month over there. Okay, but typically like, you know, February, okay, you need to be a little bit more careful when it goes to the next year. Okay, February until the end of this is I think it's March. Okay, also okay, this slide I've really, okay, sent it out in the members area. Later I'll show you. You should have already downloaded. Right? So you should refer to all this chart over there. Okay. All right. So I cannot see the month. Don't know what happened. Let me try to do this. Okay. I think you guys can see from here. Okay. So let me try to zoom in a little bit bigger. Okay, you can see over there. Okay. March. Okay. It's also marked the turning point over there. So you know we try to find the absolute high and the low over there, the swing high and the swing low. So to tell us the turning point. So again, the turning point doesn't mean that what is the magnitude of or the rally. Okay, so it is just telling you the turning point. Okay, we won't know the magnitude, but I think that's good enough. So which means that, okay, once again, in June, okay, this is the turning point and such. So let's head back to the January. So which means that, January could be also a little bit choppy, okay, and more gravitating more towards the downside until maybe late Jan or so. Then there will be a brief period of bullishness, okay. Sorry, this is the but almost the same, okay. I'm going to almost the same, but not exactly the same, but almost the same. There's some nuances, okay. But this is the post-election. Once again, it is not so good. Can you see? Yeah. Thank you, AK, for pointing out that out. Okay, almost the same. But once again, February, you need to be a little bit more careful. Okay. All right. So yeah. So which means that, okay, if you're talking about trading perspective, okay, trading wise, short term, holding for less than a month, that kind of thing, okay, I think we are right now maybe in the late stage of the bullishness already. Maybe January, okay, might need to be a little bit more careful also, okay, then until April or so, okay, then there could be some severe correction, okay, not crash lah, okay, not a bear market, but some very steeper correction, okay. Of course, this is the S&P 500 seasonal trend for the past 74 years or so. Okay, but you can see that, typically overall, okay, average for the past 74 years, okay, typically the market will bottom in March, okay, but post election, okay, the market will tend to bottom in April. Do you see a difference over there? Average for the past 74 years, okay, every year, inclusive of, non-election year, election year, post-election, all this, average about March bottom. But election year, post-election year, okay, the market tends to bottom in April. So I personally, okay, I will use this post-election chart as a roadmap because I think too many people are also looking at the typical seasonal trend. Okay, not so many people have access to this post-election seasonal trend data. So this is my roadmap. Okay, my guideline, not 100% sure, but guideline for 2025. Okay, so far? If okay, just type okay in the comments. Okay. So the gold seasonal trend over there, okay, so typically based on historical data, right, okay, we are entering into typically a bullish favorable period. So at the start of the mid December, price indeed went higher, okay, but recently for the past 1 week or so, price coming down, okay. So once again, okay, personally, I have a position in gold, okay, more for position trading. Most likely, I was thinking of holding until about February or so, like that kind of period. Okay, so this is more of a longer term position. So holding for a few months. So I'm still holding on to gold. But again, this is not asking you to copy me. This is what I'm doing. I'm based on historical data. We have this window of period. So okay, so you decide. Okay, I'm just sharing with you what is the seasonal trend of gold for the past 15 years. Okay, and then crude oil, once again, because it's commodity, so leaning towards the end of, not end, the mid-December, okay, it is going higher, okay, mid-December. So you can see over here for gold, not gold, this is for the oil over there, okay, you can see that it went down for the past 1 week or so, but still holding on pretty well. Okay, so personally, I have a position in USO. This is the oil ETF. This is more for a position, no position. This is more of a swing trade. So price here until I think somewhere around near here, I will exit already. So once again, my target is about 1.5R profit. So this is more of a short term. So I have that because previously in my members area, right, I did mention about this oil and gold as well. So oil, more of a short term position. Gold, more of a position trading position, holding for maybe 2 months or 3 months or so. Okay, so this is for the oil and gold. Okay, treasury bonds. Again, this is just another seasonal trend, so I won't be diving too much into that. Okay, I think some of you might not trade bonds as well, but but the gist is that okay, from December until February or so, okay, it's a bit tricky to trade. It's not so clear, even though it's like going higher. Okay, all right. But the turning point is like at the start of February. You can see over there, right? Okay, this is based on the Treasury bonds future over 15 years. This is ZB. You can see that based on the seasonal data, right? Mid-November it tends to go higher until mid-December. So if you take a look at the ZB, the Treasury bonds, okay, you can see that mid-November, okay, somewhere around here, okay, it really goes up. Can you see that it really goes up, okay? And then what is this date? This is until about early December, okay? It started to come down. Can you see over there? So this is December, okay? Not exactly. So all these dates it's not for you to follow to the dot, okay? It can be plus minus, okay? Plus minus, not exactly. It can be one week earlier, 1 week later. Plus minus not to be exact, but plus minus. At least you need to take note of that. You can see over there, really somewhere around the mid of December, price start to come down again. Okay, all right, and then after that, price will start to go up a little bit. Okay, choppy. So this is exactly following the roadmap for the bonds treasury futures over there. So you can see over there, this is the peak over there for the treasury bonds. Is somewhere around August, September. August, September is the peak. Okay, so once again, can you see the treasury bonds over there? August, September. Okay, can you see that? It is right? Somewhere is the peak already, right? Then after that, price go down. So once again, I have already said, okay, every year might be a little bit different, okay, but plus minus. But I think, okay, seasonal trend, it is like the closest thing to a crystal ball already, okay. It doesn't tell you the future 100%, but almost there, okay. At least give you some guideline when to look ahead. 准 or not? For the treasury bonds, quite 准, right? Yes or no? Okay, quite yes, right? Okay, so this is for the treasury bonds. So once again, so I won't be actually quite keen on the bonds. Okay, not quite keen on until maybe about February. Then maybe I'm looking for opportunities to go short again. You want to go long again, maybe mid to end of February. Then I go long. Okay, clear? Aha, now this is the Bitcoin and the Ethereum. How many of you here actually are holding Bitcoin? If you're holding Bitcoin, okay, just type BTC. Okay. Angela, like I said already, so a bit choppy for bonds. Okay, I wouldn't want to long bonds, but again, this is for me. If you think that it is okay for you, okay, plus the price action, feel free to go long. Nobody is stopping you. But for me, I think I will skip bonds for now. Okay, because like I mentioned in the SVI Connect night, right? So the member success previously, I mentioned that I exited Bitcoin, right? Okay, see, I exited Bitcoin via the IB ETF. Only me, okay? Which means that quite a number of you guys are holding on to BTC, is it? Okay, so I think in the members area, I already mentioned that, okay, October tend to be the favorable period. So no, sure, no, only Bonnie is holding on to BTC. The rest, nobody hold on to BTC. Or nobody buy some BTC or what, okay? So I already Suling, okay, MSTR, okay. Can he say so already? So already never post in the member success. Also profitable, right? Okay. So this is the October. So you can see that October for BTC over there. Okay, October BTC is over here. So when I mentioned, right, somewhere around here, right, so you just end up all the way, right? Okay, quite soon, okay. So yeah, so for BTC for now, okay, you can see that my target range was at about 100 to 120. Okay, typically a bit lesser than 120 lah, 116 or so. But somewhere around here, I think if you have held on since October, I think it's a good chance to take some profit off the table or so lah. Okay, All right. I don't know whether you continue to go higher. I'm talking in terms of a positional trade because as I mentioned previously, I was thinking that it might take a few months for price to hit 100K, but within a few weeks, price hit 100K already. And at that point in time, I was away, I think going to Bangkok also because I decided to exit earlier. Okay, don't to keep looking at the market every single day. Yeah. Okay. So yeah. So of course, right now 100K will be acting as a support again because price has broken above 100K. Now testing come back and test 100K. Okay. Again, I don't know how high the market will go. This is not for you if you think that you are a crypto native. You think that crypto will go to 500K, 1 million, 2 million, that kind of. You want to hold, continue to hold. It is up to you. But I'm talking in terms of a positional trading point of view. I hope you guys are clear. So this is the for the Bitcoin, okay? And after that, you can see that over there from December to January, okay, it is a bit choppy. And you can see from the seasonal of Bitcoin, typically at the early January, it tends to have a bearish period over there. Again, this is not a magnitude. It doesn't tell you how far Bitcoin will go. Okay, I always just treat it as a turning point. So just to be aware. Okay, all right. So even if Bitcoin just consolidate for the whole month of January, I will also say that this seasonal work as well. It really didn't really go higher. Okay, so if you really want to go so-called re-trade into Bitcoin again, maybe like early February, okay, or in mid-April is the time to go in again. Okay, so right now until January, I think not much upside to go. Whereas for the Ethereum, do you realize that initially when Bitcoin was rallying, okay, Ethereum did not really follow. Okay, Ethereum, okay, did not really follow. You can see that after that then grind up a little bit, not as much as Bitcoin in terms of percentage. Okay, so the reason it is because this roadmap is also quite true. Now, you can see that typically Ethereum it was pretty flat from October until January. Okay, you can see over there it is pretty flat from October until January. That's what the reason why, okay, based on seasonal trend, okay, Bitcoin actually outperformed Ethereum. And the time where Ethereum really shine, it is actually based on historical data for Ethereum only for the past 9 years. We don't have so much data for Ethereum, so we only have 9 years of data. But I think that's good enough. Okay, at least more than 8 years. Okay, so you can see that January, okay, it tends to starting to pop higher. Okay, until maybe about early March or so. So let's say, for example, if you really want me to pick to trade again, right? Okay, this time round, okay, I would rather pick Ethereum to enter, okay, rather than Bitcoin. Okay, Ethereum, there are also ETF for you to trade if you are not a crypto native. Of course, you want to just directly buy an Ethereum crypto wallet and such, right? You could, okay, but ETH, there's an ETF, ETHA, okay. This is the Ethereum Trust over there. This is the iShares. I think this is the highest ETF under the asset under management. Okay, the biggest AUM over there. Okay, so this is for Ethereum. So this is my personal view. I think that Ethereum could outperform Bitcoin in early January onwards. Okay, and then this is the dollar index. This is especially useful for you if you trade the forex. Okay, and then for the Hang Seng, okay, typically end of December until January, okay, it tends to be pretty bullish, pretty similar to the Singapore STI as well. This is a proxy. This is the MSCI Singapore Cap ETF. This is the EWH, not exactly STI, but as a proxy, the Singapore ETF listed on the US. So again, this is again just for reference. So you can see that for the STI, so December and such, okay, starting to go higher. Okay, it is still at a relatively high, even though recently there's a pullback because the US market yesterday came down, so it started to come down as well. Okay, so this is generally the my roadmap for the 2025. Okay, so once again, I think you guys know already. So this is a trading carnival. You can register for this event in case you haven't. So we are less than a month away, okay, into next year. So Rainer Teo, Binny Ong, Jay Toon will be speaking at the event to share with you their market outlook, okay, and also the commodity trends for 2025, okay. All right, so yeah, so this one you can actually go to the members area, log into the members area, okay. I think only recently only. All right. I think Pixing, right? I think your mic, I mute for you. Okay, yeah, I mute for you. So you can download the SVI Connect Night presentation slide over here. All right. So it is at the bottom. This one, just click and it will be downloaded to your phone or your laptop. All right. Any questions so far? We have come to the end of this segment. Okay, at the end of this segment, Q&A. Any questions so far? I think just now there's one, right? One question from who? I forgot already. Maybe you have any question, you can type in the chat box. I will just try to answer them for now. Any question? Just Angela is asking, how long was the last bear run and how long do you think the next bear run or will be? Okay, Angela was asking the how long was the last bear run and how long do you think the next bear run will be? Okay. So Angela, the last bear run, okay, it is during the 2022 bear market lah, 2022 bear market. So the 2022 bear market, okay, lasted only 10 months, lasted only 10 months. So if you take a look at the S&P 500, okay, 2022, so this was I use the SPX cash index, okay, so this is 2022, okay, so at the start to until bottom about 10 months, all right, and prior to that, I think everybody knows lah, okay, this is actually the COVID crash. It just lasted I think less than a month, is it? Okay, February, okay, until March, less than a month, because the drop was very fast. The faster it drop, okay, the faster people panic and the faster the market rebound. And this is actually I find that the market crash in 2022 was quite orderly. It is quite orderly. So typically, market crash bear market won't be too long one. Okay, typically I think 1 year or so, or yeah, you will end the bear market. Okay, or at most 1.5 year, that kind of thing. Okay, yeah, bear market very fast. Where people scared, sell very fast, come down very fast, come down very fast, go up very slow. So typically bear market will end pretty fast compared to bull market. Bull market, okay, can last up to 8 years or so. Okay, bear market typically average, okay, I think about 1 year or so, you'll be done already. Okay, yeah. Clear so far? All right. Altcoin, sorry Kenny, I don't really trade altcoin lah. So I'm not a crypto native. So I don't really trade into all these altcoins. So I can't answer your question. Okay. Angela, outlook for Hong Kong and China. So Hong Kong and China, again, I'm not an expert in the Hong Kong and also China. And a lot of times Hong Kong market, Hong Kong and proxy China market, a lot depend on the CCP. Okay, what Xi Jinping, what kind of country direction they are going. Okay, every time any single regulation or whatever it is, they will move the market. So I think the bottom is in for Chinese, but there will still be a lot of volatility for the Chinese market. So once again, I'll be using the Hong Kong market as a roadmap, okay, for Hong Kong market. So yeah, Ken. Yeah, so I don't usually trade the Hong Kong and Chinese lah. So you ask me also wrong person. Okay, I only know what I trade. Okay, I am not that guru that know everything. But typically, I think have to be patient. Okay, yeah, have to be more patient. Don't think that within the next 1 or 2 years it's going to up like the US market like that. Okay. I find selling out of the money options is much safer versus long short to a bus. Not necessary. So depending on what you are trading also. So if you are William, if you are trading out of the money stocks, okay, a lot of times you need to sell your stock. You need to sell the stock at a strike price pretty near to the current price. Okay, and if suddenly there's a gap down based on some fundamental news, earnings result or such, okay, you can also lose a lot of money. Why? Why? Because it happened to me before. I know, I know. So it doesn't mean that every single time you sell, everything is quite safe. Of course, you can continue, so but you just need one black swan event, okay, unexpected one, then you wipe out a lot of your previous earnings, okay, your profits. So I'm not saying that you can't, but just that be careful, all right, be careful of that, okay, because for stocks, it tends to have some fundamental news. Once there's some fundamental news, it tends to gap down quite a bit. Okay, so for me personally, I don't really trade stock options because I don't like the additional risk of the fundamental of the news from all the earnings that a company has. Typically, I trade options. I sell futures options like gold options, oil options, what else? Bonds options, copper options, wheat options. Okay, that kind of thing. All right. So fast stop loss, I think it is okay. I don't know about you. Okay, we need to position some for me. Okay, no stress lah. Because let's say you have a 100K account. Okay, you just put 1 or 2%, okay, as your position size, okay, which means every single trade you just lose that 1%, 2%. No, to me, no stress, one, okay. So I don't know what you mean by stress now. So I already anticipated that this is what I'm willing to lose. So even if really stop out, okay, it is fine. But of course, nothing to stop you to trade options if you prefer to trade options. Okay, different people have different way of trading. Okay, so this is why, okay, the SVI data is actually very versatile. Okay, it's very versatile. So you can use the data and trade a lot of other asset classes. Okay. Yes, out of the money means away from the stock price. Yes, that's right. Okay. Happens to me too. Mean for the fundamental news, the earnings and such, right? Zhi also said referring to the stock options, right? There's some news gap down, suddenly you've been making money, then suddenly lose quite a bit, then all your previous earnings continue, as in all your previous earnings, give back to the market, right? Then you need to continue to sell again a lot, okay, to make back the money again, okay? So that's why I don't really like to sell stock options lah. Yeah. Commodities I already mentioned already, commodities, okay, so typically, once again, okay, my views are follow the roadmap over there, okay, like the crude oil and the gold seasonal trend over there. So follow the roadmap and also the data as well. So if ask me like an analyst perspective, oh, what happened to commodities, what are the demand, supply, and all this, okay, I do not know, okay, I don't know because I do it's not my expertise, but okay, if you're talking about as a general view, okay, maybe there's a good chance that next year oil might tick higher because Trump is elected and there could be some short-term inflation because of the tariff imposed. And when there's inflation, crude oil tends to go up higher. Just now suddenly Zhixiang asking, right? Trump tariff affect the stock market. Affecting the stock market, I don't think it will affect the stock market that much. That's my personal view. So all these tariff things will not affect the stock market that much because, okay, this is not the first time Trump is going to impose tariff. Okay, at that point in time, during the SVI Connect night, there is one lady member asked, oh no, what do you think the market will go down or up because of Trump, that kind of thing, or is it good for the market and such? Like I mentioned during the session, right? Okay, Trump as a president, I think is good for the market because there is stability. This is ironic, okay? Even though we think that he's xiao lang, but it is quite stable because he has been a president once before. So we know his antic, we know his pattern, or in Hokkien we say that we know his how kwan. So what's the thing that he do, okay, what he does, that kind of thing, we know his pattern. So the market is always forward looking. So the market can anticipate, okay, what Trump is going to do, what Trump is not going to do, that kind of thing. So because already once a president, so have already a precedent, as in a precede of what has happened. So we know what could happen in the future as well. So that is not going to cause the market to crash as well. Okay, tariff also the same because happened before. I think it's not going to affect the market that much. Okay, it's been there, done that. Okay, I hope the answer satisfy you. Is that okay? The answer, okay, that's my personal view lah. Okay, but of course I could be wrong. Again, I'll be following all this roadmap. Okay, all right. Any other question? So for the uh new members, just a recap of how many of you here just recently joined? Just type me here. Tin Sing is here. Okay, just now and another person, I forget his name. Sorry about that. Yeah, I saw you raise up your hand. Okay. Oh yeah, Nobel Bonnie. Okay, so yeah. So are you guys? Yeah, Jaffa. Okay, Jaffa. Okay. Yes. So you guys know how to enter, exit, my entry point, that kind of thing. Are you sure on all these things or not? Okay, every time I talk about wash and rinse pattern, do you guys know about that? Okay, so once again, like what I mentioned, okay, if you just joined recently, okay, no need to be too anxious. Okay, take your time. Okay, take your time to watch through the master class. Okay, all this video start from the first one. Okay, understanding the wash and rinse trigger until the latest one. Okay, yeah, I don't have time to add in more things recently, but I will add in more things starting next year. Okay, and then the webinar also take your time to watch through the webinar, especially I think the previous one in September. I think quite a people asked me about the entry, wash and rinse and such. I think that will cover that pretty well as much. But just a very, very brief recap for everybody also. Just a very quick one. Okay, just a very quick one. Let me add in this setup, wash and rinse over there. Okay, so this is for the benefit of the recently new members. Okay, so my preferred setup is actually a pullback. Okay, so I don't trade the breakout pullback. Okay, a pullback is a temporal reversal. Okay, or a pause in the current trend of a stock price. Okay, or I think there's more opportunity in pullback. Okay, pullback are since the opportunity to enter in the direction of the prevailing trend. So talk so much. So what is a pullback? Okay, so this is a visual representation of what is a pullback. So the market could be trending up higher, okay, and then there's a dip, this dip, okay, so this is a dip, also known as a pullback or retracement. So whatever you call it. So dip, retracement, pullback, all meant the same thing. So there's an uptrend, and there's a price to come down, pullback. So this is not a change of trend, but a temporal pause, okay, in the market before the market go up higher again. So this is the pullback. So I'm interested, okay, to buy a dip in the pullback. So this is like a buy low, sell high, that kind of thing in terms of trading perspective. Okay, buying low over there, then selling higher. So this is I want to buy somewhere around here. Clear? So how do I know that the pullback has ended? Then market is going to resume, going to go higher. So the answer is we won't know. Okay, we won't know. Okay, but we have to pull the trigger, take our chance and pull the trigger and enter into the market somewhere around here. Of course, the best is here lah. Okay, the best is here, but sometimes we might enter a bit earlier or maybe a bit later, but somewhere around here. Okay, clear so far? Clear so far? Just type pullback PB in the comments. Can? So, okay, we want the pullback preferably, okay, to actually come down to a support area, okay, the support area, okay. The support area, pullback here, this is the support area, okay, then, we find an opportunity to enter, to go higher, okay. So what do I mean by support? So, okay, so you can see over there, like for example, like the S&P, like typically, the cloud and CPR, okay? So like, for example, over here, okay, I just give you a very quick example, a very nice uptrend over there. Can you see over there? Okay, last 2021, just an example, okay? Oh, this is uptrend, okay? Come down here at a support at CPR, go up, go back at a support at CPR level, okay? Go up at a support at CPR level, go up at a support at CPR level, go up at a support at CPR level, okay? That kind of thing, okay? Like recently, the most recent one, I think yesterday I posted, is the form factor, right? Okay, so you can see over here. See, oops. Can you see that, this starting to turn into uptrend, or maybe could be uptrend. Okay, there's a pullback at a support at the CPR level. So the support might not just be a CPR level. The support could be the pivot point level, could be the S1, S2, R1, R2. So the reason why I did not put all these lines is because, don't want to over clutter the chart, and you'll be a bit messy for you. But typically when I go in, right, I will have these lines over here. Okay, like the S pivot point, then the S1, then the R1, R2, okay, S1. So all these different pivot points area are the support or resistance area. So this is what I meant by the support. So could be the CPR level, the pivot point, the S1 level, or the S2 level, or the R1 level, or the R2 level. Okay, clear so far? Clear? So this is what I meant by support. Let me go back to the chart. So, okay, so now you know that price maybe found a support at interesting area, okay, area of interest at a support. So how do we enter here? How do we enter here? So this is what I always say, the wash and rinse trigger. Okay, once again, this trigger, wash and rinse, this term, it is not invented by me. This term is also not coined by me. Okay, in fact, I learned this from also my so-called, I call it my teacher in a way that, because I learned this from her. So from Bini Ong, Bini Ong is also one of the speakers at the trading carnival. Okay, so previously I was using another trigger before I enter using this wash and rinse. Okay, all right. So how do we turn on the CPR indicator? So Angela, you are actually not a new member, right? So you can go to the members area, okay, under the masterclass, okay, under the how to set up Ichimoku Cloud Pivot Point and Central Range, okay. All right, and then actually Oswin, if you look through the indicator, okay, Oswin actually came for the gathering session also. Oswin, okay, he actually combined this indicator into one indicator on TradingView. Okay, so can just head over to this link. It is not hyperlink, so you need to copy and paste the link into your browser or into TradingView, that kind of thing. Okay, all right, and then into one indicator, because if you are using a free TradingView account, right? Okay, good. Okay, let me share this link. Okay, so in case, okay, I'll post it here. All right, so in case you're using a free TradingView account, you can only use up to 3 or 4 indicators. So which means that you add in the cloud is already one indicator, pivot point is already one indicator, CPR is another one indicator. Then you cannot add other things really. So if you want to add other things, right, then maybe you want to add other moving averages or whatever thing it is, add other things, okay? Then this will be useful to you because it's only act as a one indicator combined into a one. Okay, but up to you. Okay, you can watch this video and do it my way. Okay, or you can use this indicator by Oswin as one indicator. Okay, I'll post the link once again here, so you go through that. All right, so the wash and rinse trigger is essentially a fake move pattern. Okay, so if you drill down to a lower time frame, okay, but I won't go through here, but you can see that this is actually like the support area. This horizontal line is actually at the support area. Then very bearish price break through this support. So if you think about it, it is actually somebody selling the breakout, okay, selling the breakout over there, okay, but price cannot go down lower, and then price reverse back up again. Okay, so this is the wash line over there. This is the wash line over there. So this was the prior low. Okay, the day where price closed lower than the previous day low, what we call the prior day or the previous day low. Okay, this is the wash bar. Can you see over there? W wash bar. This is the day where the closing price closed lower than the previous low. Okay. Then next day,
No.
price did not Morgan, I mute you. I think you are on the mic. Okay. So the next day, okay, price did not go down lower, but instead reverse back up, okay, above this wash line over there. Okay. And then this is the trigger. So this is the wash line. If price reverse back up again the wash line, okay, then this is the trigger. Clear so far? This is the buy side. The sell side, shorting side is the same. So price close above the previous day high or the prior day high. Okay. And then your price reverse back down and close below this wash line. So the key thing is price must close lower than the previous day low. So always look out for price closing lower than the previous day low. So for this is the buy side. Sell side, price close higher than the previous day low. So once again, this wash and rinse is not a candlestick pattern like a 3-bar candlestick pattern. It can be many day pattern. So as long as the wash line can stay intact. So I'll give you an example over that. So for example, I'll just use the one that I recently just used one. Okay, maybe just use form. I use the naked chart. Okay, so when I first mentioned it is here, okay, it is here. Okay, so this is the day where price closed lower than the prior day low. Correct? Okay, so on this day, price did not actually close high. Let's assume that price did not close higher than the previous day low. So it is like 3-bar, not yet. Okay, only on this day, Monday. Okay, price closed and close above the wash line. Then we go for a long, and then we ride the trade up. Yesterday, what was a very strong upward rally. Okay, so I exited there. Can so once above the line, can enter or wait for the next day to close above. Okay, so this is the key thing also. All right. By right, okay, you need to wait until the end of the day. So end of the day for US market, it is actually now it's 5:30 a.m. Singapore time. So I won't stay until 5:30 a.m. Correct? Okay. So let's assume this form factor, okay, close, okay. Let's assume that it closes on this day itself, close above the wash line. Can so far? Can let's assume that close above. So on this day, on Friday, okay, by right, you should enter just before the closing price. But most of the time, we can't. So by right, okay, the next day, in this case, it's Friday. So the next trading day is Monday. So in case this is a Thursday, then the next trading day is Friday. Okay, by right, okay, the next day open, you can enter already. But typically, okay, I like to wait for about half to 1 hour, okay, 1 hour after the market has opened and see how the market move first before I decided to enter into the trade. So let's say there's a chance that immediately open you buy, okay, the market can reverse back down, that kind of thing. So it is pretty much like this bar over there. Okay, like let's assume that this bar did not happen, but instead price closed above the previous price closed above the wash line. Then next day open you buy, but subsequently immediately price go down lower, that kind of thing. That could happen. So typically I like to wait about 1 hour after the market open, then I enter. But of course there is a risk as well. Okay, after the market open 1 hour, then the market just continue to chong higher. Okay, then it's gap up. So which means that you have to so-called enter at a higher price. Okay, do you get what I'm trying to say or not? Okay, do I answer a question for K? Okay, so now okay, how do we put the stop loss? So for those who just joined recently, okay, under the how to set your stop loss and take profit level, okay, there is this tool over there. Okay, so you go to this link over there and add to favorite indicator, add to your favorite indicator, then you just search, you should be able to see. So this is, okay, let's assume, I think previously I entered into this. I mean, what else did I enter previously? Okay, let's just go through some example over there. Okay, like AVGO, right? Wow, very good at AVGO. AVGO. Okay, so previously we entered somewhere around which date? AVGO entered is December 2nd. Okay, December 2nd, somewhere around here. Correct. And then we write all the way up before the earnings. Okay, so you add as your favorite indicator already, right? You just search for SV. But you should see like if you add as indicator SV seasonal vantage SLTP indicator. Okay, see that there are 144 people using that. So just click on that. Okay, so this is where you put your stop loss level over here. Okay, yeah, by default it is like this. By default, okay, the market it is always at the closing price. Okay, at the closing price. So by default, if you double click on this, okay, by default, okay, enable. If you want to long, you just check this. If you want to go for a short, then you just uncheck this. Then you see that this thing is reversed already. You can see that down the stop loss at the top, okay. So put long trade, the stop loss is at the bottom. So by default, it is 1.25 ATR. Okay, length is 10. You can keep this constant for now. So now the key thing is, okay, position size. How much are you willing to lose for each trade? So typically, I say, some of you said, oh, I lose a lot of money or whatever. I think you need to position size correctly. So let's say, for example, if you have a 10K account, 10K account, okay, 10K account. All right, so typically, if you read through a lot of books or whatever, typically people only use 1 to 5%, okay, per trade to risk the trade, okay? All right, let's say, for example, $10,000, 1% is how much? Can somebody type in the answer? If you have a $10,000 account, okay, to keep things simple, okay, I know some of you here got 1 billion, okay, but keep it simple, be it 10K, 100K, let's keep it to 10K. So 1% is how much? 1% is $100, right? So let's say, for example, if you only risk 1%, you are only risking 100块 for that trade, which means that if price hit your stop loss level, okay, you only lose 100块, $100. Correct or not? So you're only risking 1% of your 10K. Okay. Let's say you are extremely unlucky. Okay. You lose all the way. Zero winning trade. Okay. How many times you need to lose in order for you to blow up your 10K? Theoretically lah. Okay. You put it at $100 constantly. How many trade? Anybody knows or not? Nobody answer. This is quite simple. Yes, 100, right? Take you say 100, right? So you also need 100. Okay, you need 1% times 100 trade, 100%, so it's 10K. So you need to trade 100 times, okay, to lose that 10K. 100 trades to lose the 10K. So you're only risking very little, okay? All right, so typically people risk as I mentioned, 1 to 5%. So I typically risk 2 to 3%. So which means that, okay, if your account size is $10,000, so per trade you only use about $200. So which means that this is where it comes into place, okay? How much are you willing to lose after your position sign? Okay, so let's say you only have $10,000 account, risk 1%, so you only risk 100块, $100 here. Okay, so just type OK. So this is again by default is like this. Okay, by default is like this. So which means that if you enter tonight, today market open also at 223.62. Okay, which means that, okay, your stop loss level will be at 206.59. It already set for you based on the 1.25 average true range value. Okay, and how many shares of Broadcom can you buy based on the current 223.62 entry price? You can only your sizing can only buy 5.9 shares. Okay, plus minus, you want to buy 6 shares also can. So about there, okay, you can only buy about 6 shares of 6 shares of Broadcom. So 6 shares of Broadcom is how much? The value of the trade is how much? Okay, so like if you enter at 223.62, okay, you times 6 share, okay, the value of the position, okay, how much shares you bought is only about 1.3K only, okay, all right. But, okay, to me, all these are not the important. The important thing is how much you are willing to lose. So which means that, okay, you bought 6 shares, okay, enter at 223.62, and if price did not go in your favor and hit your stop loss level, okay, you only lose $100 because you already predetermine your position size, how much you want to lose already. So you only lose 100. Of course, exclude some slippage or some commission, but thereabout, you only lose $100. Okay, so let's say, for example, okay, you have 100, you have, okay, let me draw, I think easier for me right here. Let me use my pen. Okay, let's say you have a 100,000 account. Okay, you risk 2% of your position. So how much is 2%? Somebody give me an answer pretty quick. You can do it one. Yes, so you say $2,000, correct. So every single trade you risk $2,000, which means that, okay, you can trade 50 times consecutively, all losing trade, okay, then you lose 100K, okay. So your position size. So let's say you are willing to lose $2,000 only, okay. Very simple, okay. You put here stop loss 2,000, okay. Yeah, and same thing, no change in the stop loss price and the take profit level, but your size has changed. Okay, so right now you can, if you're willing to lose $2,000 per trade, okay, you can only afford to buy 117 shares of Broadcom. Okay, which means that if you buy 117 shares of Broadcom, okay, all right, if price did not go in your favor, hit your stop loss level at 206.59, you only lose how much? You only lose $2,000 because this is already predetermined already. Okay, so this is always what I say by position size your trade. Okay, how much you are willing to lose. So already position size for you. So you have to take it that every single trade is a losing trade. I'm willing to lose that 2,000 or $1,000. Okay, predetermined already. 你已经知道你会输这个钱了，你 just assume that you lose this money. Can? But let's say for example, Alex, I think I cannot take it. $2,000 is still a lot. How? Okay, can. Okay, you just position size until you are comfortable psychologically. I'm only willing to lose $500 per trade. Can you put $500? Okay, then you put there. Okay, so once again, same level, but your position size change. So you can only buy about 30 shares of AVGO. So which means that once again, if price hit your stop loss level, okay, you only lose how much? $500. So it is already predetermined already. So you need to get comfortable with losing because this is what you are comfortable to risk. Okay, this is not like anyhow suka buy how many shares. You already know how much you're willing to lose already. Clear so far or not? Clear? If clear, just type letter C in the comments. This is quite important. Yeah. So some members say, oh, I think I lose a bit too much on this, a bit too much on that. So you need to position size. Okay. If we use this position sizing management, can we trade CFD? Yes, you can trade CFD. Okay. To me, the leverage is not the issue. It's always the position sizing. I typically don't like, I don't really care about the leverage because if you position size properly, you won't be using leverage. You're only using how much you have only. You have 100K, okay? Okay. I'm only willing to lose 1K or 2K per trade only. All right. William, before I explain ATR, can I just continue this thing first before I go there? So once again, okay, this is based on the zero price is based on the last price. So by default, it's zero. zero means this is the last traded price. Okay, let's say for example previously, right? Okay, previously, okay, when I first entered into AVGO, it is about here. Okay, let's assume here. Okay, I just anyhow draw a line here, okay. Anyhow draw a line here. So let's assume that I entered on that day is 162.94. Okay, can you see over there 162.94. So go back to the indicator. Trade entry price, you key in 162.94. All right, and I'm willing to lose. Okay, let's assume that I'm willing to lose 100块就好，$100. Okay, you come down here. Do you see over there? This level entry price came down already. Okay, came down to the level you wanted to input. So 162, it auto calculate for you where is the stop loss level, okay, and where is the take profit level. Okay, so typically, okay, I try to take profit at 1.5R. So 1R is here. So this is the distance between your entry to stop loss is 1R. Okay, so this distance is the same as this distance. Can see 1R. So 1.5R is 1.5 times your risk. So which means that if you risk, okay, if you risk $1,000, okay, for that trade, okay, if you lose $1,000. So 1.5R means, okay, if you exit and win the trade profitable, you win $1,500. You risk $1,000 to get $1,500. Is that clear? Clear? Okay, is that clear? Clear, right? So this is the meaning of 1.5. Of course, sometimes we might not able to get 1.5R. Okay, sometimes, we can get 1.2R, 1.3R, or 1.5, or sometimes even gap up, you can get even 2R. But typically, if there is 1.5R, I would tend to exit the trade. Okay, the reason why I say 1.5R is because, okay, you can lose 50% of the time, okay, and you will still be profitable. Okay, so that like I always say, right? Okay, every time you risk 1R is you lose. If you lose that trade, right? If you lose that trade is minus 1R. Correct? So let's say if you have 10 trades, okay? If you have 10 trades, okay? If you have 10 trades and you win and you lose. Okay, let's go to the losing part first, okay? So if you lose 5 trades, how much will you lose based on R? Every time you lose is 1R. Ma. So 5 trades you lose, right, is minus 5R. Correct. Already position size already. So let's assume every trade, single trade is per trade is $1,000 loss. So 5R is $5,000 loss, right? Okay. So if every time you win is 1.5R plus 1.5R. So which means that 5 times 1.5R is equal to 7.5R. Correct or not? So net, okay, 7.5 minus 5R. So net, okay, net, you still win 2.5R, which means that, okay, if every single trade you lose position size $1,000, net, okay, you still make 2.5K of profits. Clear? You can lose 50% of that. You can lose half the trade. So if you trade 10 trades, okay, so if you trade 10 trades, you lose half. You lost 5 trades, okay, you are still profitable. All right. Clear so far? So even if you lose 60% of the time, so you have 10 trades, okay, you have 10 trades over there. All right. So this is the winning trade and this is the losing trade. Okay. So if you lose 60% of the time, is how much? You lose 6R, 1R, 60% of that 6R, so you only, okay, win 4 times. Okay, you get 6R, correct? So even if you lose 60% of the time, you still won't lose money. You still break even. Because 6R minus 6R net is 0. So you still don't lose money. So I think that is very important. So we can always get 1.5 depending on market condition. But a lot of times I think 1.5, okay, it is very achievable. because for a swing, like for example, like from here you buy here to that swing up 1.5R, it is quite achievable. Anything more than 2R, you might need to tahan, endure some further pullback before you can achieve a higher than 2R return. Clear so far or not? Clear? If you are clear, just type letter C. So don't be so fixated that I need to have very high winning rates, like 70%, 80%. Of course, if you can, if you could, okay, you choose all the right stocks, that's the best, okay? But never mind, okay? Be more calm. If you can get 1.5R for most of the time, okay, you lose 50% of the time, you are still profitable. You lose half of your trade, you will still be profitable. Clear so far? Clear. Only one person type clear then. The rest clear, can or not? Can. Can. So just now William asked, okay, what do you mean by the 1.1 what's the ATR meaning, right? Okay, so the ATR, it is actually ATR is actually average true range. Average true range over there. Okay, average true range. So this is based on 1 ATR, 5.72 over there. So 1 ATR meaning, okay, 1 ATR meaning means that average, okay, based on the past how many days, can be 10 days or 15 days, okay. Broadcom typically move about, it's move about $11 up and down. $11 up and down. Okay. Yeah, this is the meaning of ATR. So this is the volatility. So you don't want to place too narrow your stop loss. Let's say, for example, every single day Broadcom can move about $12. If you place your stop loss only $10, you are waiting to just get stop out only. You are giving money to the broker. So you cannot place too tight. You need to place above 1R to give your trade some room to breathe. So meaning for SPX, S&P 500, okay? So based on the ATR, which means that every single day, SPX, S&P 500 can typically move about 55 points. This is 54.69. So it can move up 55 point up or 55 point down. So we don't know. This is the volatility. So it doesn't tell you the direction, but it tells you the magnitude. So which means that this is 1.25 ATR. Again, you think that this is too narrow for you, okay? You can actually put it wider, okay? So like put AVGO, so just now back to this one, okay? So if you think that, put back to 0. So if you think that, I think that this stop loss is still too narrow for you, sure, okay? You can fit to your own preference. So I want to put it 1.5. I'm going to put my stop loss wider. Then you can see that this is wider already. But in any case, if you put your stop loss wider, the price also need to move a lot higher, okay, to get the 1.5R return. Okay, so you still think that, 1.5, I think it's still too narrow, okay? You put 2R, 2R, okay? Then this one become wider. So from entry price, your stop loss is a bit wider. Once again, you need to move a lot higher. The price need to move a lot higher to get the profit target. So there is some trade-off lah. Okay, so for me, based on my experience, okay, I think 1.25 suits me just nice. So tight enough for me to have some room to move, and also pretty easy for me to get the profit target. Any questions so far? Can? Any other question regarding the indicator? Christina is asking whether this session will be posted in our SVI. Yes, I will post this recording in the members area under the webinar tab also. We'll be showing us the screening of the stock. So screening stock is something that is more private to me. Okay, I can tell you, I won't be showing you for now, but like what actually mentioned during the gathering session, like John and Zhihao, they have some filtering method. Okay, So how to screen the stocks, okay? So let's see whether next year we can come out of something. I haven't really discussed with them yet. So let's see if we can really come out with something to share with you the screening of stocks of the wash and rinse and such. So for now, personally, okay, I can tell, I don't mind sharing with you. I can tell what I do, but I cannot share with you what I exactly code to show the trigger or the screening. So I use market in out screener. So this is a paid screener. So I can do the screening and such. So I screen, okay, then come out and all this lah, okay? Can? All right, so let's see whether we can come up with something next year or so. All right, so but typically I still have to look through some of these stocks lah. But give me some screens, but at the end of the day, I still need to look through the stock whether it is a good potential or not. Okay, so I use this tool. Okay, so this tool can help you to screen, can help you to back test, and a lot of things that can have some watch list. But this is a pay one, so I don't expect you to buy. But if you're not interested, you can check it out yourself. Okay, but you still need to know how to screen. All right. William say, can you explain again how to set up the FinViz to see the sector performance? Okay, so FinViz over there. So go to finviz.com, FinViz. Okay, go. This is the home page. So you can actually create your account. So under the portfolio, okay, you can create a watch list of stocks. Okay, so you can create. So for me personally, I have this sectors stocks, which means all the 12 sectors lah. Okay, all the 11 sectors plus the S&P 500. So after that, you go to the screener. After that, go to the screener. Okay, all right. Then you go to the preset here under sectors. Okay, and then go to the performance tab. You can search by quarter, by half a year, by year, or by year to date. You can sort it out. Okay, or you don't use the preset one. Okay, you can just search the index, for example, S&P 500. Okay, all the 500 stocks are inside, and then you can go to the performance sector and see year to date which is the best performing S&P 500 stocks. So the best performing S&P 500 stock is PLT, Palantir, then VST, okay, Vistra, and then NVIDIA. The worst one, it is actually WBA, Intel. Intel has been in the bad news recently, so this is how you do it. Okay. Any other questions so far regarding entry, exit, that kind of thing? Okay, or even the data sheet. Any question? So data sheet, I don't think I need to share too much on the data sheet, right? So this is pretty self-explanatory, right? So all the data, it is here: open date, closing date, winning percentage, number of years, calendar day, average profit, sector, industry. Okay, by default, I think it is actually not auto filter. So you can just head over to the top column, and then you do a filter, and then you can sort out the dates that you want. Okay, any other question? Got question or not? Everything good so far? If everything good, just give me a thumbs up or type letter G in the comments. Good. Then maybe I can move on a quick one to the end of the session, which is the market condition right now. Okay. Okay, fantastic. So no much question. So you can see that the futures market right now. Okay, let's go back to the cloud chart. Kelly said, can we buy ETF, ETH ETF? Yes, Kelly, yes. Yes, you can buy ETH ETF in IBKR. As long as it is listed in the US, you can. So it's ETHA. This is the iShares Ethereum Trust. Okay. So S&P yesterday, wow, was a very huge drop over there. Okay. So this is not this one. This is this one. Okay. S&P have huge drop over there. Okay. Nasdaq also a huge drop. Okay. RTY Russell 2000 also a huge drop. So I was expecting price to go up this week or so, but it didn't. So, it is okay if some of your trades didn't work out. For me personally, I kept stop out in IWM, Russell 2000. I enter into Russell 2000, okay, the IWM ETF, okay. Previously, I also get stop out in SVI as well, okay. So it is okay. As I mentioned, you do need to win all the trades. 50% of trades, you are good enough, you can be profitable. So it is okay. Losing is part and parcel. Okay, so now, then what happened to the market? Okay, so you can see on social media, was like, oh, the market is going to crash, this kind of thing. Okay, by the way, okay, do you think, are we still on track for a Christmas rally, or you think that, you know, things are looking very bad? It's going to be a bearish Christmas. If you are bull, just type bull. If you are bear, just type bear. Okay, so for me, I think this is a good chance to still look for opportunity to buy into the market. Okay, so once again, nothing much else has changed. Fundamentally wise, nothing much. It's still as the same. I know the just now I mentioned, you know, the earnings of the companies, you know, all this, nothing much has changed. Okay, no catalyst. It's just sudden drop because of the Fed. Okay. So, oh, my daughter is back. Hi, Jenny. Hey. Okay, so this is back to the DP gallery over there. So let me post this link. All right, so you can see the breadth, market breadth. So on the Facebook Live, okay, I see that your market breadth is low. Now it's even lower, okay. The percentage of stocks above their 20, 50. Yeah, Jenny. Hey. Go outside first. Who's here? No, not done, not done. Come. Sorry, that's my daughter. Hey, go. Hey, sorry guys, I bring my daughter go out first. Hey, go, 爸爸去做工 go. Then I talk to you again. Okay, I'm back. Okay. Her name is Janie lah. So next year she's going to P1. Routine change already. Yeah. Yeah. Nowadays preschool is in I mean that start at 9:30 lah. So next year is going to a routine change. So her school will start at 7:30 lah. So go school bus also 6:30. You need to go up the bus already. See how lah. Okay. Anyway, the market breadth. So you can see that now the percentage of stocks above the 20 days MA is only about less than 6%, 5% only. Okay. Percentage of stocks above the 50-day moving MA, also a midterm kind of perspective, also quite low. We are at a relatively, you can see that we are somewhere at a relatively low level already over here. So market breadth is at a low. And typically when the market breadth is at a low over there, can you see over there? Okay, follow my cursor. I will just do the, where's the cursor thing? Okay. Inspect. Okay, can you see over there? Why do you type 3333 Catherine Teo? So you can see that typically when it is at a low, he's previously at a low, market just bounce up at a low, okay? Market just bounce up at a low over there. Market also bounce up at an extreme low. There's a very deeper sell-off at a low. Market also go higher, okay? Back then, somewhere around here, okay, at a low, market also go higher. At a low, market also go higher. So we are at a low, even for the 50 days, we are also at a low. Market at a low here, go higher. Market at a low here, okay, it rebounded. Market at a low here, go high. So we are there. We are almost there already, okay? All right. Of course, it doesn't mean that price cannot go lower lah. But I mean that right now, I think the probability of going higher is, I think, is pretty good, okay, based on past data. Okay, but what has happened before? This is based on the market breadth for the moving averages. Okay, and then if you take a look at the McClellan oscillator, once again, Monday I said that it is at a low, but now it's even lower. Now it's even lower. So, but once again, pretty similar lah. Okay, at a low over there, at a low over there, at a low over there, at a low, all rebounded one, all rebounded. Okay, so we are at a low already. Okay, the only thing that I don't like so far is this the advanced decline. So this is another market breadth. So you can see that while the market it is going higher previously, right? Okay, the no market is stagnant there. Okay, the breadth starting to go down a lot lower already. So this is something that I don't like. So if the market continue to be bullish, the bull market, right? Okay, moving forward, the AD line should go higher. As price go higher, the AD line preferably go break the higher again. Right now it is breaking the previous, as in the prior swing low already. Can you see it? Breaking the prior swing low. So this is something that I don't like. But short term wise, okay, short term wise, I think that we are primed for maybe a rebound. Of course, price can continue to go a bit lower, but I think we are almost there. I think we are almost there for a quick rebound. And after the rebound, how high the market can go, we don't know. Okay, but again, this is more for short-term trade. Okay, let's see, have to wait for see whether the market breadth is improving and such. But short-term wise, within the next 1 week or so, I think we are almost there. Okay, and not only that. Okay, just now VIX, right? Students asked about VVI. VIX one, VVIX, nothing much to say about for now. But if you take a look at VIX, take a look at VIX. Okay. Okay. I think previously I mentioned about the 1 standard deviation, the 2 standard deviation, and all this, okay, in the members area, okay, members area over there in the masterclass, the latest one that I do, okay, how to do data analysis on VIX using ChatGPT, okay. I'm not sure how many of you have watched it, okay, but the bad news is, okay, nowadays Yahoo don't provide the data anymore, so a bit difficult to get the free data to go for other sources, but okay, the value doesn't really change much lah. So for the VIX, okay, the mean, the average is about 19 to 20 level, the first red dotted line. Okay, I'm not sure how many can remember. Previously, I said that, hey, if the market, not the market, the VIX hit 3 standard deviation, there's a panic. Okay, no need to think too much. Just buy. Whether you want to hold for short term, long term, mid term, whatever, just buy. Okay, you most likely the high chance that you make profit one. After that, really make profit, correct or not? Okay, so previously hit more above 3 standard deviation. Just buy, that kind of thing. Okay, so right now, okay, not surprisingly, okay, because the market, not the market, the VIX is at a low. It is at about 13. So at any point in time, volatility will come back. Okay, just that a matter of when. Okay, so it has come back already, and it has actually hit the first SD standard deviation at about 27. Typically, when the market is at a correction or the end of correction, typically you hit the first SD and the second SD. Second SD is a bit steep correction. So previously you can see that hit the 2SD, first SD, after that a correction. Okay, after that big come down. So maybe I add in SPY for comparison. Okay, so can you see that typically when price hit the first standard deviation over there, okay, it was the end of the correction, and then price goes higher. This was the second hit, second deviation, okay, at about 35 VIX value, somewhere around here, Can you see? This was the low of S&P, then market go rebounded higher. So this was once again, all these are the second standard deviation, 2SD, okay, at a low, 2SD, at a low, rebounded, 2SD here, at a low, rebounded, 2SD here, at a low, and then rebounded. Okay, even for 1SD, okay, there is some short-term rebound also as well. So once again, okay, I don't know. Okay, the market can still continue to go down lower, but okay, but based on the VIX, okay, we have actually hit the 1SD. Okay, can you just type 1SD so that we know we are on the same page, 1SD. Okay, so there is a correction, and this also sparked a good buying opportunity over there. Okay, all right. So if price really go down to 2SD, then I think that almost there. But right now it's coupled the fact that there is a correction hit 1SD, and coupled with the fact that the market breadth is at a low, McClellan is at a low. So I think that we are almost there. So this is my perspective. So for me personally right now, okay, I am looking to buy into the small cap, also the small cap, okay. For me, this one no need the wash and rinse trigger. I think I will just buy, okay. I will just buy, okay. Then I will place a stop loss, a bit wider and such, okay. I will just buy to keep for maybe 1 or 2 weeks or so. Then see how high can the market go, that kind of thing. Okay, yeah. So this one a bit discretionary, not exactly following the wash and rinse trigger pattern, but I think that we are at a low. So again, this is not recommendation to tell what to buy or what to sell. This is just my personal view. I haven't bought yet, okay. So I haven't front run you yet. I'm just telling that I might not also. I might only buy into the small cap or also the RSP as well. Okay, clear so far? What do you mean by so expensive? So this is my personal view. So I think the sell off might be almost over already. But again, cannot guarantee. I could be wrong. So always still place your stop loss level. Where you want to place your stop loss level, you decide. Okay, and where to place, 1.5 R, 1.5 ATR, 1.25 ATR, up to you also. Okay, you decide. Okay, all right. So different people have different way of preference, where to place their stop, how long to hold, that kind of thing. Yes, yes, I'll be buying IWM. Most likely I'll be buying IWN again. Yeah, I got stop out once, I will buy in again. Okay, clear so far? So this is my view. I think the sell-off is almost there for now. If let's say, for example, if I were wrong and the market continue to go another sell-off, then I think that maybe my view again towards the market view might change, but we shall see how it goes. But for now, I think I'm still bullish, gravitating more towards the bullish side of things. TNA, what is TNA? TNA is leverage. Okay, I don't do leverage. Yeah, I think it's the small cap same, but it is 3 times leverage. So I don't do that. I don't do. So I always use the non-leverage vanilla ETF. That's IWM. Okay, you can also buy into S&P, Nasdaq, because almost the same. All very steep sell off. Okay, that kind of thing. Clear? So up to you. You decide. So I don't give you any specific things to trade, but based on what you understand from my view, you decide, okay? Or you want to enter on the exit, also you decide. Where to place a stop loss, you decide. Okay? Yeah, okay, this is more of a discretionary view. Okay, clear so far? Clear, okay, just nice, about 2 hours, just nice. My daughter also just came back from movie. She went to see, watch Mona. Yeah. All right, so any last question, okay? So, yep, I covered the uh, outlook for the year, okay, based on the seasonal trend. I also covered the wash and rinse trigger, the setup pullback, and also the indicator, stop loss indicator, and also covered the market outlook, current market outlook. So all these 3 things I covered already. So with that, I think that's all for today. So once again, thank you so much for joining me. Okay, we'll be doing more educational webinar. Yes. There'll always be ongoing webinar lah. Okay, there will always be ongoing webinar in 2025. Don't worry about that. Okay. Yeah, and as usual, the weekly update as well lah. So with that, okay. Thank you so much. Okay, so yeah, have a good evening ahead, and I will see you again in the next weekly video update. Thank you so much, and thanks for staying with me, and thank you, and bye bye. Okay. So I'll end the webinar already. Bye-bye.